Imagine this. You invest $100,000 one single time, and instead of waiting years to see results, money starts landing in your account every single month. Not once a year, not quarterly, but 12 times a year. That is the quiet power of monthly dividend stocks, and today we are breaking down exactly what could happen if you invested $100,000 into the best 5 monthly dividend stocks right now. This is not hype, this is not fantasy, this is math, strategy, and long-term thinking for real investors watching this on Stock Predictor. Let's start by setting the ground rules. We're not chasing risky penny stocks. We're not gambling on meme trades. We're focusing on established companies and funds that actually pay investors every month. The goal is simple: steady income, diversification, and compounding over time. We'll split the $100,000 evenly across 5 monthly dividend payers, $20,000 each, and then walk through income, risks, and what this could look like after years, not days. Now imagine you wire that $100,000 into your brokerage account. Instead of fear, you have a plan. Instead of guessing, you allocate $20,000 into the first monthly dividend stock, Realty Income. This company is often called the monthly dividend company for a reason. Realty Income owns thousands of properties across the U.S. and internationally, leasing them to big-name tenants like Walgreens, 7-Eleven, and Dollar General. These tenants pay rent, Realty Income collects it, and you receive a monthly dividend. Let's say Realty Income yields roughly 5% annually. On a $20,000 investment, that's about $1,000 per year, or roughly $83 per month. That may not sound life-changing at first, but remember, this is just one stock. Every single month, without selling shares, that cash arrives. And historically, Realty Income has increased its dividend over time, meaning that monthly check slowly grows. Now move to the second investment. You allocate another $20,000 into a high-quality monthly dividend fund like Main Street Capital. This is a business development company that lends money to middle-market businesses and also takes equity positions. The income from interest and investments flows directly back to shareholders. Main Street Capital has traditionally paid a higher yield, often in the 6 to 7% range. Let's assume a conservative 6%. That's $1,200 per year on $20,000, or about $100 per month. Now combine that with Realty Income, and you're already generating roughly $180 every month, just for owning assets. Third, you invest $20,000 into a monthly income ETF like JEPI or a similar income-focused fund. These funds generate income through covered call strategies while holding large-cap stocks. They are designed specifically for income investors who want monthly cash flow. Assume a yield of around 7%. That's $1,400 annually, roughly $117 per month. At this point, your monthly income from 3 investments alone is approaching $300. And we're not done yet. The fourth investment goes into a monthly dividend writer fund focused on infrastructure or energy income, such as an energy royalty-style income stock or diversified income trust. These types of investments benefit from long-term contracts and cash-generating assets. We'll assume a yield around 8% for this slot. 8% on $20,000 equals $1,600 per year, or about $133 per month. Now your portfolio is starting to feel different. This isn't theory anymore. This is money showing up every 30 days. Finally, the last $20,000 goes into a higher yield monthly dividend payer, something closer to 9%, but still established and widely held by income investors. This could be a specialized income fund or high-yield REIT focused on cash flow stability. At 9%, that's $1,800 annually, or $150 per month. Now pause for a moment and add that up. $83 from Realty Income, $100 from Main Street Capital, $117 from the Income ETF, $133 from the infrastructure or energy income investment, $150 from the high-yield monthly payer. That's roughly $583 every single month. Over a year, that's almost $7,000 in passive income, without selling a single share. Now here's where things get interesting. What do most people do with their dividends? They spend them. Smart investors reinvest them, at least in the early years. If you turn on dividend reinvestment, every monthly payment buys more shares. Those shares then produce more dividends the next month. This creates a snowball effect. Let's imagine you reinvested that $583 per month for 5 years. That's more than $35,000 flowing back into the portfolio over 5 years, not counting dividend increases. Your original $100,000 could quietly grow into $135,000 or more, while still producing monthly income. And remember, many of these companies increase their dividends over time. Even a small annual increase of 2 to 3% compounds massively across a decade. That $83 payment from Realty Income could become $90, then $100, without you adding new money. Now let's talk risk, because no real investing conversation is complete without it. Monthly dividend stocks are not guaranteed. Interest rates matter. Real estate can be affected by economic downturns. Covered call funds can underperform during strong bull markets. High yields can be cut during financial stress. But that's why diversification is everything. You're not putting all $100,000 into one stock. You're spreading it across 5 different income sources, across real estate, business lending, options income, and infrastructure-style assets. When one slows down, another can stabilize the portfolio. Another powerful point most people overlook is psychological. Monthly income changes how you invest. Instead of panicking during market dips, you start looking forward to buying more shares at lower prices with your dividends. Volatility becomes an opportunity instead of a threat. Now think long-term. 10 years from now, if you continue reinvesting, adding even small extra investments, and allowing dividend growth to do its job, that monthly income could double. $580 per month could turn into over $1,000 per month. That's utility bills paid. That's groceries covered. That's freedom from depending entirely on a paycheck. And here's the biggest lesson. This is not about getting rich overnight. This is about building a system that pays you for being patient. $100,000 invested into monthly dividend stocks is not flashy. You won't see headlines. But quietly, month after month, it works. If instead of reinvesting, you chose to live off the income, that $580 per month becomes real-world support. It supplements income. It reduces stress. It buys time. And if you grow the portfolio larger than $100,000, the numbers scale up. $200,000, roughly $1,100 per month. $500,000, nearly $3,000 per month. $1 million. Now you're talking about real financial independence. The key takeaway here is simple. Monthly dividend investing turns capital into consistency. Instead of hoping for price appreciation, you focus on cash flow. Instead of timing the market, you build ownership in cash-producing assets. This is how long-term investors think. This is how wealth is built quietly. And this is why so many smart investors use monthly dividend stocks as the backbone of their income strategy. If you found value in this breakdown, make sure you support Stock Predictor by subscribing, because we break down real investing strategies, real numbers, and real-world scenarios like this every single week. Remember, the market rewards patience, discipline, and consistency far more than excitement.